Whoa, what's going on? YouTube, on Facebook. Beardo liked my video. He's not seeing this. That was on there. Sorry for the camera angle. I have a terrible webcam, and it's at the bottom of my actual screen. So it is what it is. If you're on Facebook, you actually have my phone, so it looks a lot better. So I got to invest in things and merge everything together, so I don't have to do it this way. Anyway, for those checking in, thanks for stopping by. I'm going to go over, let's see, what is passive investing? And hopefully my chat is up. I'm not really good at doing these lives yet. I'm still getting used to them. And again, the camera's in the bottom. So if you see me doing this and looking there, that's YouTube, that's Facebook. All right, so what is passive investing as to passive income? It's not rocket science. It's essentially just buying a piece of the entire stock market, one piece at a time, every week, forever, and never selling. It's that simple. It's the easiest thing that you can actually do when it comes to investing, is to actually buy something like an index fund and for the long term and keep it and try to live off the dividends of that. So we'll go over those terms to help clear it up. So what is a dividend? Why do you want them? It's essentially a piece of collecting a piece of the profits from the company that you're owning. Okay. If you buy Apple every 3 months, every quarter, or every half a year, or every year, they'll have a dividend payment. Or when they collect whatever it is, stock that's out there, or whatever their profit is, they decide what they're going to do. Are they going to reinvest it, or are they going to give it out to their shareholders? And if they don't reinvest all of it, then they have to give some of that out in form of dividend, which is a payment. Okay, that's a dividend. So you want that. What is interest? Essentially, with a bond, you're loaning money to someone and they're paying you back for a specific amount to borrow that money. So if someone borrows $100 and it's a 5% interest, then they pay you back $105, right, over time. So passive investing is just buying a piece over and over and over again. Okay, so you have those dividends and interest over the long term, because it takes forever to actually build something that can pay for everything, unless you're building a business or into buying real estate, or just any of those kind of things, like affiliate marketing, building those kind of businesses. That's different from this. This is something anyone can do. Anyone with a pulse and some money can do. And I can't give financial advice because I'm not an advisor. You got to look into this yourself. But what I do is I buy index funds, which is essentially a fund of, not funds, but a fund that has a small piece of thousands or hundreds of companies. So instead of owning $1,000 worth of Apple, I own $10 worth of Apple, but I own 100 or 200 other companies as well. So that's the reason. The reason I buy that is because it gets rid of the fluctuation and the risk. Risk is a dirty word. We'll talk about that a little bit more. But when we say risk, it's risk of loss. But you don't lose anything unless you sell. Okay. And by buying an index fund, you're actually spreading that risk out. Because if you're buying a fund that has 500 companies in it, well, to lose all of your money, every one of those 500 companies would have to disappear overnight before you can get your hands on it. Right? Now, I just learned something really cool where this is how cool passive investing is, because eventually it becomes a passive income, because you have this big nest egg that kicks out interest and dividends. Where you can, if you're 18 and you put $300 away every month for 8 years, just 8 years, you'll never have to invest again until all the way up to retirement. Because if the stock market is growing like it has been, about 10%, by the time you get to retirement age, you'll have about $1.8 million just by putting $300 a month away when you're 18 for 8 years. Like before you're 30, you can be set. I mean, you won't be set when you're 30. You can't live off that money. You can't touch it. You have to keep investing it and just let it grow organically by itself. But you'll get there. Okay, so passive investing is just taking an automated pilot approach toward investing and buying the entire market. Stop listening to the news. Stop watching Jim Cramer scream about the next buy and hold situation. Forget about all that. You're just going to take an allotted amount of your money, 5, 10%, 15% ideally, and just put it away in a 401k if your employer has it and they give you a match. You got to know about fees. That's a different video. You can put it into an IRA, a Roth IRA, tax things. Just start investing, okay? Or you can put it into a regular stock account, okay? Don't worry about those fluctuations. Buy. Actually, right now, I'm filming this in the middle of the pandemic or at the tail end of it. This is the best time to buy. The market's down, right? Sell high. You want to sell high, right? If you got into this pandemic and retired, you took a little bit of a hit, but it always comes back. Name this in the comments, okay? When in history did the stock market completely go away? If you can give me that information in the comments, it'd be $100. Honestly. When it completely went away, never to be seen again. Can't. Okay? So it's just the act of purchasing over and over and over again. And my recommendation is, no matter what you're doing, if you have side hustles, if you have a day job, if you have your own business, if you have other real estate, I think you should take a small piece of that money and just keep putting it away. Just forget about it. Just forget about it until you're older. So you have that. So if you do something where you buy a piece of real estate and you're renting it out and you have that income, well, you have this other pile of money on the side. If the house burns down, you're waiting on the insurance, you have this other pile of money that you can live off of. If you're building some sort of business, then you have this other thing that's outside of your business that can hopefully protect you, right? Or you can just take a little bit of, from multiple streams of income. You get interest and dividends and then real estate, and then maybe you don't ever retire. You just keep working and take money from there. It's all up to you. So that's what it is. If you have any questions, leave me a comment in wherever you're at, YouTube or Facebook. Just leave a comment and I'll get back to everyone, whatever it is. All right. And I can link out to some other videos that you might be interested in if you want to learn more about that. There's some playlists on my channel. I think there might be playlists on my Facebook too. If not, there's a link somewhere in that stream to one of my YouTube videos. No problem. And I want to thank everyone for tuning in. And it is my sister-in-law. She's tuning in. All right, so I'll catch you guys later. Thanks.